Buddy, this is Gary Yam here with Frank Lopez. Frank, how are you?
Doing well, Gary. How are you?
I'm great. You know, I want to talk about the interest rate situation. We were pondering like, hey, our interest rate are gonna drop? Is it not gonna drop? And what does it mean for home buyers? Well, it did drop last month, and it was a lot of excitement because finally it meant that new home buyers could afford to pay less interest, interest rate. And
Right,
the Federal Reserve dropped what, 0.5%, right?
right. Yes.
And the whole lending, well, to come up to borrow on a mortgage was cheaper. I think it dropped to what, six? Did it go to 6.2, 6%?
It was in the high sixes, very close to seven,
Mm-hmm.
and then it dropped down to 6.5 and below that.
Oh,
So
it was
we did see a drop.
it was hopeful. Like it was getting hopeful. I could feel the environment. Like, oh, we're getting better now. Now I can finally afford something. And then last week or so, interest rate went back to 7%. Now, this is how I understand this work, and you can correct me if I'm wrong. This is no. Let's make it simplistic. The Federal Reserve dropped the price. Let's say during the pandemic was 0%. To make it simple, during the pandemic was 0%, and the bank would take this money, borrow from the Federal Reserve at 0%, and lend it to us at 3%. And that's
Right.
how we came up with 2.5, 3% interest rate during the pandemic. And now that the first said, hey, no more free money, we're going to start raising the rates. They raise it to whatever rates they have. So the banks would actually, well, have to follow whatever the rate is. So let's say that when it was 0%, they slap 3%. And let's say that it is 3%, they slap another 3%, right? So that came out to 6%, whatever that is, right? Now,
Right.
would it make sense that if the Federal Reserve drops 0.5% from their fund rate, which is just called when the Federal Reserve lends money to the bank. If the Federal Reserve drops 0.5% and the banks gets this new rate of 0.5% less, wouldn't it make sense for us, the consumer, to get a 0.5% discount on the mortgage rate?
Well, technically we did.
When?
We
Because I saw the prices went back again at 7%. So technically, how?
Well, it's not well, you said, why didn't we? Well, we did. We did see rates drop.
Yes, for
It
like a
drop.
minute.
Well, and that's a different story. Um, the bottom line is that when lenders started when the Fed said, first of all, the Fed said that they were going to drop rates. I think they were talking about possibly four rate cuts in 2024. I think they were saying that last year,
Every
and
quarter, pretty much.
yeah, and everybody got excited about that, and they said, "Oh, great! Next year is going to be a good year for real estate, a good year for refinancing. Um, Homeowners are going to want to start moving again. The
Yeah.
people that had their 3% rate and would like to sell, and
Yes.
they decided, well, I'd like to move, or I need to move,
Yeah. It was
but
going to
I,
create more motion, and then the economy is going to kickstart again to this new era of, well, wealth. But that's
right, right.
speculation, though.
Well, right, but it was still the Fed last year said, "Hey, we're going to drop rates four times." So everybody's getting excited about that. We're going to have a great real estate market in 2024 because of that. And we're halfway through the year and no rate cut from the Feds. We're three-quarters of the year, and finally they said, "Okay, well, we'll give you something." Actually, it was we'll give you half a interest, half of a percent rate cut.
Yeah.
So when they said that, but they didn't do it. They
So it,
announced
it
it, but they
happens
didn't
all
do it.
the time, though. Politicians promise. Like, let me give you an example. Donald Trump offered two stimulus checks. Joe Biden said he will continue giving those checks. When he got elected, no stimulus check, nothing happened in those 4 years. Now, are we supposed to hold him back? No, like it happens all the time. They promise something and then it became fiscally impossible because it wasn't responsible for them to give free money, and it didn't happen. But the economy reflects that. But what I'm saying is we don't live in speculation. Like these rate cuts, it did happen. Like what, 3 weeks last month?
Right,
It did happen and
right.
nothing happened to the economy. How is it possible that you get a discount, but it's not reflected on the interest rate, mortgage interest rate? How come it's not reflected? That's my whole
Well,
question.
okay, and here's my quick response. So lenders are borrowing money from the the Federal Reserve,
Yes,
and then they take it and they lend it to us at
yes,
a profit.
and I feel
And
yeah, it's
and
capitalism.
you said that right, and you said that profit's about 3%, and I think that's a reasonable number to work with.
Yeah.
So that's how it works. Now, the Fed announced that they were going to raise, excuse me, they were going to drop rates. They didn't say how much, but they said they were. As soon
Hmm.
as that happened, that's when we saw interest rates come down from 7% to middle sixes, at least the middle sixes.
Okay.
And now the lenders, B of A, Chase, Wells Fargo, none of them had gotten the rate cut yet, but they're speculating, they're guessing, okay, we're going to get a rate cut and we want to get this, we want to get the real estate market going. We want to build some momentum. So since we know that we're getting a rate cut, let's drop the rates now. And they did. And we saw that rate cut for a very short amount of time. Now, here's my best answer on why we saw it for such a short amount of time. The Fed has really been super careful in making any change at all because they're super worried about inflation.
Yes.
Any chance, any discussion of inflation, the Fed just, freezes. And that's why last year they said we're going to give you four rate cuts. And this year we've gotten one so far. And because of the recent announcement that the economy is still strong, they haven't said they're not going to lower rates, but all the lenders are thinking there's no way the Fed's going to give us any more rate cuts.
I
Does
don't
that make
expect that
sense?
either. Yeah. But
Right.
does
But
does that mean that
so
the bank already like they already accounted for the discount before even receiving the discount? That is
yeah,
responsible.
they basically said, hey, we already gave you a rate cut. We gave you a savings for 2 weeks. That's all you get. Um, and and at the end of the day, it's up to them, to decide how much they how much they are going to charge or not charge, and
Yes.
how competitive they want to be. Um,
Well,
you
if the discount happened and the banks are getting together to say, you know what, we're not going to get any discount, then isn't that monopoly?
That's a great question. Um, that is a great question, and because technically you want to be competitive, but on the other hand, they could. Um, I mean, they could all just kind of, they're all watching each other like, let's see what happens. Let's see if somebody, actually does something. And they all just and they end up doing nothing because no one is really being aggressive. And I don't think we're going to see any lender be aggressive when when I think the forecast, most people are thinking the economy's just way too strong to get any more rate cuts, and I don't care if the Fed said they're going to drop rates four times. They're not going to do anything. We might not even see rate cuts in 2025 because as long as the Fed is worried about inflation, I don't care how many rate cuts they promised, we're not going to get them. Does that
Yeah,
make sense?
I know. So what I'm getting at this is that we cannot rely on the Federal Reserve announcing any rate cuts to say, oh, we're going to get a discount or not discount, like we're going to get a lower rate. We cannot allow for that to be our clutch then.
right, and it really depends on philosophy and some, federal, some federal the I forget the term. The person in charge of the Fed is the
Chairman?
chairman. The
Yeah,
yes.
Jerome Powell.
So, but we've had aggressive chairmans. We've had more flexible, more easier. Um, uh, more some that are wanting to see the economy work well. You've got, a Powell who is very conservative, and he's looking at, I don't care what the economy is doing. My job is to keep inflation under control. And of course he does care, but at the end of the day, there's a greater interest in keeping inflation under control. And his answer is going to be, look, I get that I promised you guys 4 rate cuts in 2024. Guess what? Things change. And I don't know what the forecast is going to look like in 2024. And if the forecast is saying that the economy is strong, you don't need rate cuts.
Got it. So what I'm getting from all this is that do not rely on whatever promises the Federal Reserve you hear. If you're
Right?
looking to buy a house, then look at your own personal economics or your own personal economy,
Well,
and if you can afford it, then go for it. If you cannot, save some more and just wait. That would be my only advice for people who are looking to get into real estate, because that's what we do here. We talk about real estate, and I always want to make sure to see how would this translate into the real estate market.
that's a great point. You've got to base it on what works for you. The other thing is, if you've got a rate, if you see a rate drop, don't try to time the market
Hmm.
because you will always get it wrong. And if you see a lowered rate and you're ready to buy,
Hmm.
jump in and do it fast because you don't know if that rate, I mean, again, this is a perfect example. What we're talking about right now is a perfect example that, I'm sure everybody was thinking, well, let me wait until rates get better. Guess what? They waited too long.
Yeah.
So when it's good, you jump in and you move fast.
Yeah. Well, Frank, our time is up, but it was good talking to you, and talk to you next time.
Okay, talk to you soon, Gary.